And Hao Hong, now managing partner and CIO at Lotus Asset Management. So, I mean, you've got kind of two themes. We can start China, we can start the Fed, but I think if there's sort of a broader narrative that investors are looking at, and I think specifically around this reporting, Kevin Hassett is firming up to be the Fed chair. There's maybe a little bit of concern. Is he going to be someone that's too close to Trump, and you're going to see those market jitters once again?
Well, I think everybody now sees that, whoever going to be the next chairman for the Fed, he is or she is going to cut interest rate immediately and also expand the balance sheet. And this is because, if you look at the repo market in the near term, right, so the repo rate is shooting above the Fed fund rate. So that means that, the repo market liquidity is very, very tight. So whoever gets to be the next chair, he will have to cut interest rate and also start re-expanding the balance sheet immediately.
I guess it's the question then of how far along are we in the easing cycle, because yesterday we were talking about just the number of different projections we're getting from FOMC officials. Essentially, I think it was 11 different projections of where the neutral rate should be in the last time we had that survey back in September. So maybe, one cut, December is pretty much done, but what about for 2026 then?
Yeah, I think the market is looking for a couple of more cuts in the coming year. I think, if you look at the precious metal prices, it's already, pricing in substantial easing going forward, and also probably monetary inflation. And I think as a result, if you look at especially silver, right? So silver is a cheaper precious metal, right? So it's continued to make new highs, and, people are betting on, aggressive rate cut and Fed balance sheet expansion.
Where do you weigh in on, essentially, I know the stock market is not the economy, but with the Mag 7, it is a proxy, obviously, and there seems to be a little bit of heat coming out, again, concerns about the AI bubble, and as well investment going into AIs. We've seen a number of different Fortune 500s concerned about that.
Yeah, I think, before this quarter, the capex that is going into the AI sector is actually still being funded by free cash flow. So I think as a result, I think before this quarter, everything looks okay-ish. But I think getting into this part, where, you're actually extending credit and borrowing money to do your capex, then, there could be a cash flow problem going forward. And also, if you look at the valuation of the Mag 7, right, many of the related stocks, they look really frothy. So I think, we are getting into a bubbling stage. But I think, at the last stage of the bubble is the part where you get most of the return.
Where are tariffs going to play in the inflation story going into 2026?
I think tariff, on one hand, tariff is going to suppress demand, because the price has increased, especially essential items for many of the U.S. Americans. But I think, in general, I think the effect from the import taxes is going to be lifting pricing pressure for the U.S. So I think as a result, as you can see, on one hand, the Fed is bound to cut interest rate, but then on the other hand, inflation pressure is actually rising, and that is auguring for monetary inflation.
How do you game it out, though? Because I think that obviously there's delayed transmission on that. I mean, right now you've got, for instance, sort of the whole thing just being kicked down the can. You've got the can being kicked down the road. But Trump says he's going to be going to China in April of next year. I mean, maybe that's the point. You actually see some progress.
One should hope so, right? So I think, at the part where the economy is still not in the recession, and also, the price pressure is rising, but not like very substantial pressure on the economy, and then the Fed starts cutting interest rate, this is the part where risky assets actually outperform.
So my next question is kind of pivoting as well into Asia, and that's the situation with the U.S. dollar. We're going to talk about the yuan a little bit later.
That's right.
That is inching stronger slightly towards the 7 handle. But what's your outlook, given all what's going to happen with the Fed and the interest rate cut environment? What's going to happen with the dollar?
Yeah, I think the dollar is in a secular downtrend. Right? So once the Fed start cutting, once the inflation pressure in the U.S. economy is starting to be felt by almost everyone, then people would start pricing in a further dollar weakness. So it's a multi-year secular downtrend. But then during this downtrend, of course, we're going to see some technical rebound. For example, in recent months, we're actually seeing the U.S. dollar stabilize around 96, and now it's back up to 100 level. So I think you're going to see many of these technical rebounds along the way. But I think overall, in the coming years, the U.S. dollar secular downtrend is going to continue.
Can you just go back then, I guess, to your commodities call and as well how the direction of the dollar plays into that?
Well, a weak dollar would be good news for commodities, obviously.
Exactly,
and so besides the precious metal price I mentioned just now, if you look at copper price, for example, right? So, it's going through the roof. Aluminium is going through the roof as well. So I think their strength is going to continue, as long as the expectation for monetary inflation is in place.
But also the expectations of tariffs as well, with the copper story, with a lot of the inventories being brought into the United States ahead of any potential tariff shock, and that's why we're seeing fresh records in copper.
Yeah, I think he's trying to make up his mind, what to do with the copper tariff. He's wavering. But I think, even if, he hasn't made up his mind on the duty, on the import duty, I think, we're at the part of the economic cycle where, commodities tend to outperform.
On the AI story as well, because you mentioned that we're getting toward the end of that bubble. What does a deflation of the bubble look like? Are we coming into a burst? Is it going to be a slow deflation? What's the characteristics, do you think?
Yeah, I think all bubble burst at the end. So, we've seen many of these episodes happen. I think even in 2022, right? So when the Fed started raising interest rate, we actually saw the tech bubble deflated by 30%, which is quite substantial. So I think this time around, the bubble is even bigger than before. Everybody is putting in tremendous amount of capital into the sector. I think the market tend to sort of overestimate the impact on AI in the near term, but then on the long term, of course, AI is going to transform the human society.
How does it play out then? I mean, who gets most burnt? Because, for instance, there was the Anthropic CEO speaking overnight at a New York Times event, but saying that they've been a little bit more cautious in their capex and spending really just a fraction of what OpenAI is looking at.
Yeah.
So if you've been a really heavy spender in this environment, are you the one that gets most burnt, or is there something else that you look at?
Yeah, I think people, haven't sort of made up their mind. The U.S. model really is that, the hyperscaler, right? So you're just throwing tremendous amount of money on AI, trying to scale up. But then the Chinese way really is, so we're making do with limited technology, limited supply of GPUs, and trying to maximize our output, from these limited resources. So it's a very different model of development. And also, Chinese development is open source. For example, the DeepSeek a couple of days ago, right? So actually released a new LLM that rivals the other.
Two updates.
That's right. So I think it's, both sides are making tremendous strides in this area. I think, it's two different models. It remains to be seen who gets to lead the world.
Later, we're going to pivot to talk exclusively about China. Later in the show, you're going to stick around. But I did want to ask you about the labor market again, because that's what's fueling, increased bets upwards of 90%.
That's right.
We're going to get a cut next week, Wednesday, December 10th. But again, it also dovetails nicely with the AI stories. We're seeing these corporates laying off people. Was it Amazon, 15,000 jobs, a number of things.
That's right.
So that's also going to be, as Bell talked about, the bad news led to the good news on the markets, but the bad news is also leading to more bad news, possibly more job losses and more labor market weakness.
Yeah, I think so. As this sort of a breakthrough technology continue to develop, right? So as you can see, the lower echelon of the society actually lose out, right? So people keep talking about cave-shaped economy. The economy that is the part of the economy that is dominating is the part that requires lots of capital, right? So because the AI capex is humongous, but then at the same time, as the technology being developed, then we probably need less labor, and therefore many laborious jobs being cut out. So I think as a result, later on, many of these jobs would have to be transformed into the other parts of the society where they find new ways to make a living. For example, these days, we have YouTuber, we have people, KOLs on the internet is making like millions of dollars, and then this is an entirely different lifestyle that cannot be imagined a few years ago.
All right, Hao Hong, stay with us because, as we said, we're going to get more views on China in particular. But